Hey everybody, welcome back to Drawbridge Finance. Today I am giving you guys an introduction to profit loss charts because I think it's an important tool to understand how to option trade. Hope you guys are having an amazing Sunday. And as I talk about Sundays, I want to let you guys know that I'm actually going to be switching up my regular schedule for my regular viewers. I'm going to now be releasing my videos on Thursday afternoons at 1 o'clock in the afternoon. It's just going to change it up so that I have a little bit more free time on Sundays. I'm trying to be a little bit more strategic about how I utilize my time. So I just wanted to let you guys know that that change is coming starting next week. We're going to do Thursday videos instead of Sundays. So if you're already a subscriber, then that's great. We'll see you next Thursday, of course. And if you're not a subscriber, then you should be. Click on the subscribe button down below, turn on the notifications bell, because today's video is really important because it's kind of setting up the basis for a long-term strategy that I'm going to continue to trade for the rest of the year and probably into next year. Now, this strategy is one that can generate pretty massive returns. As you guys know, I'm a dividend investor and I specifically target dividend stocks that are looking in between like a 6 and 10% dividend yield. And that's a really passive way to make money. But my day-to-day trading is actually in options trades. And my option trades generate much more income for me. I can average around 3% a month doing pretty minimal trading. And that equates to a lot over the year. If we do 3% a month and we do 12 months in a year, that's a 36% return annually. And I know that lots of people would love to be able to make that kind of money, and I would love to be able to show you guys how I do it, and so that you're able to build your wealth along with me. And so one of the things that I remember when I was learning about options was the profit loss chart. And when I very first started about 5 years ago, I got this book. It's called Getting Started in Options. I'll put a link down in the description below because this was a pretty good book to get me going. It has a lot of terminology and it showed me a bunch of information that I would need to become a full-time options trader. But one of the things that I find interesting in this book is the profit loss charts are different than the ones that you typically see. If we look at this chart, the profit loss, this is selling a covered call, but the profit loss chart is set up in a similar fashion to a stock chart. Let me show you what I mean. I'm going to show you Caterpillar's chart. So this is what it looks like. It's in candlestick form. You can see the price down here is $114, and on the side, the prices go up in value. So 160, 150, 140, and time is the bottom value. So it's a 2-axis chart, and it has time on the bottom and stock price on the right-hand side. That's similar to how they show this in this book. This profit loss shows the value of the underlying position, in this case Caterpillar, is on the vertical axis. Now, when I don't think that this type of chart is actually that great. So I'm going to show you the type of chart that I like to use, and I'm going to show you a really basic version just in buying stock because it's a little bit of a mind twist. Literally it is. What we're going to do is we're going to take a look at this chart. So we know that time is on the bottom and we know that stock price is on the right-hand side. So on the vertical axis, we have lower prices here and higher prices here. This is what we're typically used to looking at. But imagine that we take this chart and we rotate it. We're going to rotate this chart 90 degrees. And when we do that, it ends up looking like this. So now the bottom axis is the price of the stock. So we have a lower value here. And as we go to the right, sorry, these are all covered up, but we're $130 here, 140, 150, 160. So the value increases from left to right. And if we were to use this chart over time and the stock price was going up as time went by, the price would be going in this direction. We kind of have a line going 45 degrees down or whatever angle down. If it was going down over time, the stock price would be going like this. I think this hopefully makes a little bit of sense because when we look at option strategies, we often look at a chart or a profit loss chart that looks similar to this, where the price of the stock is on the horizontal axis. So let me just show you a little chart that I built, and we're going to talk about Caterpillar, and then you might start to understand what the profit loss chart is going to look like. So here we go. We have the underlying purchase price. Now the underlying in this case is Caterpillar, but it can be anything. It can be any stock. It could be ETF, a bond, whatever. And this is the profit loss of a long position. So buying a stock or ETF. In this case, it's Caterpillar, $114. Now in the future, we don't know if this stock is going to go up or down. But what we can do in looking at a chart is we can see how much money we would make or lose if we sold it at a different price. So that's what we're looking at for this particular chart. So if the underlying price was $110 and we purchased it for $114, then the underlying price move would have been negative $4. And if we sold it, we would have a loss of $4. I think that makes a lot of sense to you. I think that's pretty basic. So if the stock went down to $111, we would be down $3. And if we sold it at that price, we would have a loss of $3. Subsequently, if the price went up, we had an underlying price move of $2, or from 114 to 116, and we sold it, we would have profit of $2. So you can kind of get an idea of this. Buying stocks, it makes a lot of sense, because once you're in a long position, a $4 loss, if we sell it, is a $4 loss. If the price moves up, whatever we sell it for, we profit that amount. It's a 1-to-1 ratio. So what I want to show you is what it looks like graphically, because that's the important part. And it's kind of how we analyze option trades as a beginner option trader. Here's the graphic version. So the center line is the price of the stock. As you can see down here, we've got the underlying price, and it's lower to the left and higher to the right. So if this was our purchase price right here, and we have zero profit at that point. If the price of the stock or ETF goes up, then the profit increases, and it increases usually at a 1-to-1 ratio. So $1 increase gives us $1 of profit. We have to take into account commissions, of course, and that is going to come into subsequent videos where we talk about commissions and how they can affect us as option traders. But for today, I want to just talk about the base values to give you guys an idea of how we look at a profit loss chart. Nobody actually uses these profit loss charts for buying stock because it's really boring. It's a straight line at a 45-degree angle. When it goes up $1, we have $1 profit. And that's why this chart doesn't make a lot of sense, and we don't use it for long positions or just buying stocks. We would never use this type of chart. But for options, we start to use this chart because it can show us the potential profit or the potential loss and how we're going to manage that and limit it. That's what we're looking at. If the stock price goes down, the underlying price goes down, then the profits go down if we sell. Now, of course, if we don't ever sell, if we just continue collecting the dividend, we don't care if the price goes down because we're just continuing to collect the dividend. But I'm not talking about dividend trades specifically. I'm talking about short-term trading so we can make money consistently every month. So the loss is limited to the investment amount. However much money you put in at this point, if the stock price goes down or the ETF price goes down, it will be limited to the amount that you invested. It has unlimited profit. If we purchase stock at this price and then the stock price goes up, then we have absolutely unlimited profit. Notice there is no time valuation on this particular profit loss chart. This is only comparing two things. It's comparing the value of the stock, either higher or lower, and the profit or loss. That's what the comparison is. Now, as an options trader, and this is where this is a complete misnomer. People talk about options being risky, and options, in my opinion, options are not risky at all, because when we are long stock, we could potentially lose all of this invested capital. We could lose all of the money. It's just a straight down line. With options trading, we can actually alter these charts. Imagine if I could take this red arrow and I could just chop it off. If I could just cut it off right here, and I could draw a line so that it doesn't matter how low the stock goes, the value of the loss could never breach a certain point. And that's the power of options. And that's what we're going to be talking about in the subsequent weeks and months. We're going to be going through different strategies, and I'm going to actually be putting on real trades so that you guys can see how powerful these option strategies can be. I hope you guys can stick around so we can all get rich together. Thanks so much for watching, and I'll see you next week on Thursday.